Hi, my name is Brian Winderly, and today I'm a director in the loan department of Bank of America, followed by two of my other group members here, and we're going to talk about, what we do internally in deciding what small business or corporate level businesses deserve a loan. To talk about, we provide financing capital for tons and thousands of businesses across the United States. We actually have a relationship with 99% of Fortune 500 companies. So we have a vast range of businesses that we lend to, either small business or from the corporate level. What a lot of people don't know, we're going to talk about today is banks are actually businesses too. So when we make the loans, we try to turn a profit too, and we actually are the fourth. We have the fourth greatest revenue as far as businesses across the United States. Just to name off a couple competitors, Citigroup, J.P. Morgan, and Chase are three bank competitors that we have to keep our interest rates at a competitive level. And next, I'll pass it over to my director, another director in the loan department, Adam, and he'll talk to you a little bit more about that.
Hello, I'm Adam Workus. I'm a director of the loan department at Bank of America. Today we're going to be evaluating Johnson& Johnson. A little bit about Johnson& Johnson is they are a big manufacturer of medical devices, pharmaceutical, and consumer goods. They are also one of the Fortune 500 companies in the U.S. They had $65 billion in sales over the last year. Some of the few products that you guys might know are Tylenol, Neutrogena, and Clean and Clear. And they actually have a AAA credit rating, which means they are very credible, and we will touch on that a little bit later when I send it over to Jordan.
I'm Jordan Michael. I'm the third and final director here at Bank of America. Johnson & Johnson has come to us. They've asked for $100,000 in loans. And so what we need to do is determine, first of all, whether or not we want to loan this to them. Then we need to, if we do say yes, we need to decide the length of the loan period, which is how long we'll give them to pay back, and then the interest rate we want to charge on this loan. Do we want to charge the prevailing interest rate, which is the same thing as the market rate, or do we want to go higher or lower? Also, we need to decide if there's any restrictions that we want to place on the borrower as a condition for making this loan.
We're going to begin with the length of the loan period to determine how long they're going to have to pay us back. After reviewing Johnson & Johnson's financial statements, we've come up with a fair loan period. We're going to give them a maximum of 4 years to return their money to us. We have decided on this because after reviewing their contractual obligations and commitments, 62% of their long-term debt was due after the year 2016, but Johnson & Johnson is still in good financial standing. After reviewing their results of operations, I noticed that the sales have increased by 5.6% over the last year. After reviewing the balance sheet, I saw that the current assets have increased by 15% and total assets by 10%. So this just shows that the company has been growing over the last year. And while looking at the assets, you must look at the liabilities, and their current liabilities have actually decreased by 1% over the last year. They did take on more liabilities in overall by 22%, but even though their liabilities have increased, Johnson & Johnson has proven that they can pay off long-term debt. That is why we're going to give them a 4-year loan period, and we believe they will pay us in full by the end of it.
Okay, now that Adam has talked about the period of loan that we established before, I would like to talk about how we arrived at the interest rate that we have set up. We actually have, we have the $100,000 loan over a period of 4 years, and we determined that the interest rate we would like to establish is a 5% interest rate. And before I go into why it's 5%, I would like to talk about the things that go into determining what an interest rate would be for each individual small business or corporation. The four big things that we found out that go into an interest rate. Number one is credibility. So basically, how credible is the business that is applying for a loan? How credible is their word that they'll pay us back? So basically, we kind of look at their past, and we'll be able to determine have they kept their word with past loans? Are they good at paying others back? Are they good with what they apply for? The next thing is the prime rate. The prime rate basically is a market rate for interest rates. Like I spoke on before, banks are businesses, and so the prime rate kind of establishes an index for our bank, including other banks. It's a market rate to say this is where interest rates start at, and it provides a benchmark for the other banks, including ourselves. The next thing is a federal funds rate. Federal funds rate is an interest rate that banks trade or lend money actually, and the interest rate that banks have on the money they lend each other. Then lastly is the expenses on the loan. So that goes as far as the processing of the loan, the salary expenses behind determining that loan, and the funding cost to obtain the funds to make that kind of loan. Now I'd like to address how those four things that I pointed out before, the credibility, the prime rate, the federal funds rate, and the expenses of the actual loan apply to Johnson & Johnson. So number one, I'm going to speak on the point of credibility. Johnson & Johnson is actually one of 4 companies, I believe, in the United States that has a AAA credit rating, which basically means the bank takes on close to 0% risk lending out this loan. So that's saying that Johnson & Johnson has been very, very credible as far as when they have debts, they get the money back on time, and they really have never had a problem being able to do that. So the bank actually doesn't take on much risk and has a sense of comfort knowing that they're lending out to Johnson & Johnson because they know that they'll be able to pay that back, because a AAA credit rating is actually a very prestigious thing to have. And so the prime rate, what I was speaking on before, is about 3.25% for loans today, as far as a benchmark. But due to the fact that they do have a AAA credit rating, we're actually going to bump that down to starting at about 2.75, and that's just because we aren't taking as much risk giving the loan out to Johnson & Johnson. So we have the 2.75, and then the federal funds rate was about, I think it's 0.25% right now. So that will actually bump it up to 3% total. And then obviously the expenses that go into loan, as far as the salary expenses, paying employees to process this loan, finding the funds to get this loan, and obviously at the same time we're a business, we make profit too. We add an extra 2% to that. So on top of the 3% from the prime rate and the federal funds rate, we have the 2%, which would even out to 5% in the end. And so that is how we came up with the interest rate of 5%.
It's important for us to consider placing restrictions on our borrower as a condition for making this loan. This is the common procedure, and we could be strict. However, Johnson & Johnson seems to be a good risk, so that won't be necessary. For example, their debt ratio in 2011 was 49.77%. That's very respectable. Also, earnings per share was 3.54 for 2011. And again, their AAA credit rating, that just confirms that really only a couple of minor restrictions will be necessary. So first, we ask that Johnson & Johnson provides us with quarterly financial statements for the duration of the loan period. We do this all the time, and we could ask for monthly to provide us with this every month, but again, this is a good risk company. We're not too worried. So as long as we have statements every quarter just to check up on them, and we're sure they'll follow through with that. Our second restriction will be a debt ratio no greater than 80%. This was based on looking at this ratio from its competitors over the past 4 years, and 80% was the highest reached. But in this time frame, Johnson & Johnson haven't even had greater than 50%. So it's very lenient, and we trust them to uphold this.
On behalf of the loan directors of Bank of America, Brian, Jordan, and myself, we would like to congratulate Johnson & Johnson on their new $100,000 4-year 5% interest and loan. While we will keep an overview on their financials with minimal restrictions, we were happy to do business with you and look forward to future endeavors with you. Hope you guys enjoyed our presentation on how to make a loan.
Thanks.